This stock just jumped 12% in one day. But it's not a fashion brand or retailer. It's Crystal International, one of the world's largest clothing manufacturers. Founded in 1970, this Hong Kong-based company supplies big names like Uniqlo, H&M, Gap, and Levi's. It operates 20-plus factories across Vietnam, Bangladesh, China, and Sri Lanka. Crystal makes everything from denim and underwear to activewear and knitwear. So why the spike now? The company just posted solid earnings after a tough 2023. Revenue exceeded $2.3 billion United States dollars, with net profit at $260 million. Profit margins are improving thanks to better order visibility and leaner operations. ROE is holding above 10%, with low debt and consistent cash flow. Their P/E ratio is under 10, undervalued compared to global peers. What really stands out is their shift to sustainable production. Crystal is working with global brands to offer recycled fabrics, low-emission processes, and traceable sourcing. This aligns with ESG trends, especially in Europe and the US. From a technical view, the stock just broke its 50-day and 200-day moving averages. Volume tripled, and RSI is trending up without overheating. Institutional money is moving in, and brokerages have upgraded it to buy. Looking at the macro picture, global apparel demand is recovering. Brands are rebuilding inventory, and low-cost, reliable producers like Crystal are back in favor. Geopolitical diversification also helps. Their non-China capacity protects against tariff risks. So here's the bottom line. Crystal International is not flashy, but it's efficient, global, and stable. If the rebound in fashion demand continues, this stock could quietly double. But it's still in a cyclical industry, sensitive to export demand and consumer trends. Do your own research before investing. This video is not financial advice. If you found this helpful, like and subscribe for weekly insights into hidden global stocks.